Welcome back to the Hustler Circle, 3 Minds, 1 Mission. This is episode 18, and we're diving deep into the topic of changing your life while buying property and investment properties. And we have a special guest today who happens to be helping folks purchase their first homes, but also for folks who are expanding into a bigger property and looking to invest in the real estate market. So very excited to have Stefano here today. He's actually a loan officer with Florida Home Finance. And we're going to get a little bit into his brain to understand a little bit more about how the loan processing works, but also get to know the market a little bit better. A lot of folks have messaged us and told us, hey, if you ever have an opportunity to bring a home lender on here, I would love to just understand a little bit more. We're not going to go super into the weeds because what he does is super technical. But if it's the first time you're watching our podcast, please make sure you hit the share and subscribe button and comment and share this with whoever you want. But we're really excited to kick off the conversation with you, Stefano. Your journey into home lending is unique, and like anybody who goes into the real estate space, but home lending is one of those things where it's a unique skill set. You happen to have been in sales for a long time. So I want to dive into like what made you pivot into home lending and get to know you a little bit better. Everybody watching this wants to know you, who you are, where you came from. So let's talk about how you're helping folks build wealth in 2025. So talk to me a little bit about how you transitioned to home lending. And again, welcome to the podcast.
Yeah, thank you so much. Thank you, Chris. And thank you guys. Thank you for the opportunity to be here.
Of course.
I'll tell you a little bit about myself. I'm originally from Venezuela, and I came here for college. And after graduating college, I really didn't know what I was going to do with myself at the time. I didn't have a career path that I wanted to take at the time. And I started looking for jobs, right? Like anyone that graduates college. And I found a job at a finance company that finances home improvements. So I started off in a financing company, financing home improvements for homeowners, energy efficient improvements to be more specific. And as I was there, doing sales for these type of for this financing, I realized that I really enjoy the financing side of it. Right. So I've always liked and enjoyed sales, but I really like the financing side of it. So I started digging a little deeper into what could I do in financing specifically. And since I was already in real estate, in that company, I was looking at what was my next step. What was the next step in my career? So it was really a passion that I developed. It wasn't really something that I already knew that I wanted to do. It was a passion that I developed in that job. And then when I was there for a few years, and then I decided that being a mortgage broker or transitioning into home lending was what I wanted to do. I had other colleagues that were already doing it. They were doing well. They enjoyed what they were doing, and I thought that was the perfect path for me.
That's awesome because I think for a lot of folks watching, you always start, and like Dee always tells me and Alex, they're serial entrepreneurs. They're your traditional, like, start a business, have it scale. They know what buttons to press. They've learned from the mistakes, which is you have to do as a business owner. But potentially folks who are looking into like shifting in their career, like you were in the weeds in a specific role, and then you found a niche that you're good at and that you love and passionate about. So that's great. So talk to me a little bit about like home loans is a huge responsibility. And I say this from a perspective of like, I'm in my 4th property that I've owned, and purchasing that first property, I can tell you right now, was probably the hardest thing I've done in my life. Mainly because a lot of it is unknown. Like, and you can watch as many YouTube channels as you want. You can be an expert as you want, but when you're in the process and they start asking you for the most random things, that's where I was just like, what? Like, I already provided you my taxes, my wife's taxes, my W-2s, all my income statements, everything. You have access to all my banks. And then you're asking me for like what I did in 2012 and like, what is this payment for? I mean, it was like so meticulous. So talk to me a little bit about like how you manage that responsibility with the client. Like I didn't get any one-to-one relationship with the loan officer. It was just like, you're approved. Here are the documents you need to send. And then every time I get requests, I was like, should I send this?
No, that's a great question, and actually, I'm very fortunate, just like you guys, very fortunate to be in an industry and in a job where I'm able to help people, achieve one of their life dreams, right? Which is purchasing a home, especially that first home, right? Then when you're buying your primary residence, when you're buying the first home for yourself or for your family, it's a huge, it's a huge step. And I'm very fortunate to be able, to help people accomplish this. So, one of the main things is, it's making sure that the client understands that we're all on the same team, right? So I'm working, for them. I'm on the same team as them, right? I am not just maybe a bank or a lender. I work for the client, right? Because as a mortgage broker, I don't work for any specific bank. I work, the client hires me to find the best options for them.
Got it.
So I want to make sure that I build that trust with the client in those, that first communication, or that when, we speak for the first time, and ensure that I am as transparent as possible. I have discovered that in this industry is not really about being the cheapest or the one that maybe offers the lowest rate or the lowest cost. It's about being the most honest broker or the most honest loan officer that you can be. Because that's when people really feel like they're being taken care of. Yeah. And that's how, you can build that trust and walk them through those, those steps that for them might be, difficult to take, or, those, if they need to provide paperwork or if they need to provide certain information. We deal with a lot of delicate information, a lot of, confidential information. It's very, very private, income and documentation. So it's all about the relationship that you build with the client. And my main goal has been to build a relationship with the client and ensure, that we're all working together, on the same team, rather than somebody that is just, aside, doing my own thing while they're, just providing me paperwork.
What's something that you do that separates you from like the next loan originator? I mean, I know the answer to this question because we work together and I know how above and beyond you go for the clients, but for anybody listening, like what separates you from the traditional other loan, officer that people can find on Google or Instagram?
Yeah. I think, going back to kind of what I was saying, just being an honest and transparent loan officer goes a long way, because a lot of the clients that we receive are coming from maybe other lenders or other banks. A lot of people feel like they have been misled in the past, or they, gave it a try at a different time, and we're not able to do it for a reason or another. So I think that a big part of our success is to take care of each person and treat each person in each scenario, uniquely, right? And cater to what every person needs. And on top of that, not giving up easily, right? When I was mentioning, we work with multiple lenders with multiple different guidelines and different products, different programs. So we have the ability to to look through different things that we can offer to the client, and we can put on the table multiple options for them to choose what's really best for them. Yep. So we're really, I try to guide people in the right direction so they can make the best decisions for their family. Right. I am not the type of maybe loan officer or person that is going to tell you this is the option that you should do, or this is the program that you should go with. It's more of what do you feel comfortable with and what's better for you and your family.
Got it. And that's interesting because, achieving that first property and purchasing it is hard enough. I will tell you, like when I bought my first property, the first mortgage lender that I had left such a sour taste in my mouth just from the experience that I got the opportunity to refinance during COVID 20, and my rate I was in Jersey, went from like 4.6%, which wasn't bad at the time, to like 2.8 or 2.75. And I used that same lender to move to South Florida and buy a second investment property and my current property. So it's like you stick with the folks that you kind of like are tied to because they're honest and they know what to do. And I didn't know you at the time, so I wish I did. But not knowing someone down here is a little bit different because I'm dealing with someone in Jersey that's calling to see what are the best opportunities in Florida.
And I think that, and you brought up a good point. When you were buying that first property, it seemed like a very difficult process because everything was new to you.
Yeah.
So going back to your question, Alex, a big part also of my job is to educate people,
Right.
right? It's not only to tell them what they should do or what I need, you know, in order to make it happen. It's also about educating them and helping them learn what it takes to buy a house and helping them learn what they could do after they buy that house and how they can maybe build a portfolio or, you know, or get more houses. You know, so develop a whole plan of what they want to do in real estate beyond just buying that house.
Well, I think you do a great job of providing that education through your content. Cause like, I remember when, you know, we've been helping people buy houses for 8-9 years already. And like, I've learned a lot of new things about buying houses through your page, through your content.
Thank you.
And honestly, your page helped me help motivate me to get out and make my own content for what I'm doing. Because it's just like you were on film, just holding your camera, telling people, you know, the tax returns, the P&Ls, like just explaining things that most loan officers don't put out. And you don't really see like a lot of loan officers putting out good content. It's just like
at all.
Deal funded, same day approval. And it's just like all these wins, but you're not educating, like you said, you're not educating
Along the way.
people. Yeah, along the way. Like, think about it. Me, for example, I'm in the process of trying to buy a house. So like all that content you're putting out, I'm just putting in the back of my mind, saving that data and putting it like, hey, the day I go to buy my house, I need to have all these things ready. So I think the education aspect is really what separates you.
Yeah, the education also, like, remember, there's a natural wall that gets put up when you deal with finances, right?
Yeah.
Like people have their guard up. And when you start from an educational perspective, you kind of build the trust from within. Like versus like, I'm going to call you, trust me, just send me your stuff.
Yeah.
I'll walk you through it. And you mentioned a good thing as well, where it's like the first experience I had, it was like, you have to take this option. I mean, like, and I was asking a lot of whys. I'm like, can you explain to me, like, what are the other options? No, this is the best for you. And I'm like, at the time, I'm like, I knew enough where I was like, it's not a bad deal. But at the same time, I'm like, I wish he would have just explained. I just wanted to learn.
Yeah, because
I'm like,
the
for me,
journey,
it's the first.
Yes.
the
I
journey and
understand.
the journey and the education is always just as important as the milestone that's going to be achieved, right? So like you were seeing his stuff, Al, and then you don't even because like obviously we talk about everything, but sometimes there's things we don't talk about. Like he would hit me up about my content. And there was a message, either I texted you or I hit you on DM one day where I told you, because you asked me something, I go, brother, just start.
Yeah.
I go, just start putting it out there. And then I'm definitely not the reason why you shoot content, but I did inspire you at a certain point.
Absolutely.
From the stuff that we were doing when we started DIY.
And
Then how it blossomed into Funding Supreme. And then now I'm like, damn, you inspired my own brother to shoot content too, because a lot of the things that you discuss in your content and your posts are very conducive and they intertwine with what we're doing, and then vice versa. Like how many instances, all right, so can we agree that every single client that buys a house, they have to run their credit?
Absolutely.
It's 100%, right?
Yeah,
out of every 100 houses you sell, they have to run 100 credits, right?
Yeah, absolutely.
So how much more of credit do you understand now after we've met versus before? And what is, like, how much information do you know now that exists as it pertains to credit versus like just when you looked at things from a loan officer perspective? Like, do you understand credit more or less the same after we've met?
No, way more. It was a game changer for me and my business, to be quite honest with you. I watched your content for a long time, and as you mentioned, I told you that I love what you were doing, and it definitely motivated to start my content because I knew that was an additional tool that I wasn't really using, right?
Yep.
Just to educate people, right? I don't really do it, for the need of getting more clients, right? I do it more to educate the people that follow me. And I loved when you started doing your content. I think I shot you a message there because I really like that you started doing it, and it's you guys handle and know a lot of very valuable information, whether it is just to, for the purpose of buying a house or just for the purpose of having, good credit for almost, everything that you need, your credit for.
Well,
So
what I've noticed about loan officers, because we just started working with a new one in Pennsylvania, is that they're just all using simulators.
Yeah.
They don't even know. Like, I have a loan officer. She sends me a file and she's like, "Hey, I'm thinking about running it through the simulator." I'm like, "We don't need a simulator. I can tell you right now that
I am the simulator.
the utilization.
We have a simulator in our office. Don't worry.
Like SimCity over here.
You change your voice. Hi, the simulator's on.
No, she sends me a credit. This is crazy because that's actually a great point that I didn't even think about is how much have you learned since working with us, being a loan officer, right? This lady, so we're looking at a credit report and there's 0 negatives. The hard inquiries are minimal. The credit score is a 612. And she's like, I'm going to go ahead and I'm going to run a simulator. I'm like, we don't need a simulator. The reason why is because number 1, there's no negatives. Number 2, the guy doesn't look desperate. He doesn't have a bunch of hard inquiries. What is the problem here? It's the utilization.
Yeah.
So we know that if we just bring that utilization down, there's no simulator needed. It's going to automatically raise your score. Right. So those are like the little tools and tricks that people learn by working with us. And obviously now following the content that we're pushing out, we just give that out for free. You know?
And I think for the most part, when you started learning more, obviously you already knew about credit, but you now know, like, it removes the ability or the ability to lose clientele. Yes. Because a lot of the mortgage lenders that we work with is like, we turn away like 50, 60 clients because they're like at 640 credit score and they don't want to pay that interest rate. I'm like, and I hear the 640, having worked with D now for almost 2 years and Alex, I mean, like, that's just utilization. You're not in that mid 600 range because you have negative items.
And it doesn't come in a day. Like none of us, because of the fact that there's always so much new information, we're never going to have all of, like, there's things that you understand, Chris, that I don't understand. And I'm okay with saying that. Yeah. There's things that Alex understands that I don't understand. And I'm okay with saying that. So when we put ourselves in a position to be open-minded, to continue to learn, to be proactive, to assimilate new information, now we're in a position where we're able to pay that forward to our clients saying, hey, this is and then, like, as an example, we have a guest coming in a couple weeks, or I think actually even next week. He's a very prominent dentist, and he was purchasing a $1.5 million property. And just because the thing is, getting the degree is one thing in school or whatever it is, the certifications. But then when a person can grab that and have the entrepreneurial spirit to combine those two things, they can become very dangerous and they can start pulling in crazy numbers. And it's, for me, that inspires me. But in that same breath, those people are trying to do so many things, pay their student loans, make money, make ends meet, pay their rent, this. Sometimes they can fall short of having the education on the credit perspective. So I had a client, and again, he'll be here now, he'll be guest speaking. He had a 550 or 580. This guy makes millions of dollars a year, literally. Taxes, personal business. And I'll never forget, I know that in these engagements, you have the realtor, the mortgage broker, you have the loan officer, and then you have maybe a couple people in between. So, like, he has his secretaries, he has his things in place. So I'll never forget this phone call where I already had given him the plan of action. He goes, hey, do you mind explaining it to my mortgage broker, whatever? I already know, based off of my dealings in the past, that there may come a time where I'm going to have to be a bit more than assertive with the individual or individuals, because I'm going to have to, in a very short time frame, bridge the gap on things that I know that they don't understand. Yeah. Given that you just said that they have to run 100 credit profiles for 100 houses. So even then I'm like, okay, so I let him know, hey, I'm going to tell the client or the mortgage broker what they need to hear. If there's any pushback, like, I'm going to let you know what time I'm on. Yeah. And I'll never forget, there was like 5 people on the phone. They all were talking for 15 minutes, but whatever. And basically were telling me I wasn't going to be able to get the job done because they had ran it through the simulator. And I was like, look, bro, like, I don't care about any of those things. Yeah. Like, those things I don't care about. Like, just pay me to do my job. If I don't hit the marks that I'm hitting in 60 days, then you can say X, Y, and Z. And if I do hit it, which I will, I don't even care for a thank you. Yeah. And I'm telling you, he will be here in a week. And he was able to close on that property because of the education. Because it's not only, like we discussed and like what you've seen, it's not only predicated on the removals of the negative items. You have to build and add and properly maintain the positively impacting items. So, like, those are a lot of these proverbial X factors that come into play when a person thinks that they have everything at their disposal in terms of the metrics, but in reality, there's a lot of different things that can come out from left field and right field to really put that client or that person or that consumer in a position that helps them reach whatever their goals that they have.
Yeah. And it's it's interesting because I'm like, I want to chat a little bit about misconceptions that folks have when they're buying their first property. You hear things like, oh, you have to have a massive amount to put down payment, et cetera. Like, talk to me a little bit about, like, if you're a first time home buyer, like, what are the common misconceptions that you always have to be like, quell their concerns. Like, no, you don't need, 28% down or anything like that.
Yeah.
There are also like a lot of incentives for like if you're in the active military or past
Absolutely.
military. There's a lot of things out there, but folks get enamored by watching a TikTok video of some guy who doesn't know what they're talking about, telling you like, oh, make a 30% down payment so you pay less interest over time. And I'm like, you can actually do the reverse and pay less down payment and then pay an extra $500 a month. And all of a sudden your whole but talk to me a little bit about like those misconceptions, because I'm sure you get them every day.
Absolutely. Great question. And I'll start with this, right? For a mortgage loan, you need, four things. I call them the four legs of the table, right? You got your credit score, you have your debt, you have your income, and then you have your savings, your money, your cash, to close, your cash for the transaction. So those are our four legs, right? It's important that we, that we have those four elements in order to do it. However, within each one, right, or within each category, there are, different options, different incentives, different things that we can manage or that we can work with, right? So, for example, when it comes to the savings, right? I'll start with that one. A common misconception is a lot of people think that you need a lot of money to put down to purchase a house. But look, you could do, for a primary residence, if you're buying your first home, or if you're buying, it doesn't even need to be your first home. It just needs to be the house that you're going to be living in.
The dwelling,
right?
The homestead, yeah.
Right, exactly. You can do a 3% down payment with a conventional loan, or a 5% down payment with a conventional loan, or you can also do a 3.5% down payment with an FHA loan. Okay. So, it's minimal compared to other type of programs, especially when it comes to investor programs where they need a larger down payment. And then on top of that, you need some additional money for closing costs. But again, the main misconception there is that you need a lot of money to get into the house. In addition to that, we have programs that cover the down payment. We have programs that provide incentives, banks that provide incentives to cover the down payment.
Builders right now. I'm
Builders.
in Florida, there's like multiple property. I was telling Alex, talking to him about this, and I didn't mean to cut you off, but I'm like, right now, like there's some builders that are like Lennar and stuff that are like handing you the down payment.
Yeah.
Like not even half. Like, it's like the full 10%.
The other dynamic too that Stefano deals with that like he hasn't touched on yet is he deals with a lot of people that are in his same shoes that came from either Venezuela or came from Central and South America that don't have, because imagine like for those of you that have grown up in the United States your whole life, like imagine moving to another country, getting into the system, maybe opening a business, learning about taxes on the personal side, the business side, and then having to learn how to acquire the credit to be able to purchase a property, right? So like that's another gap that you also bridge for clients that I've lived, because, and for those of you who don't know, he's actually our neighbor. Like he lives in our same neighborhood that me and my brother live in. And I've seen our neighbors come to him for counsel, for this, for that, in terms of properties, because they are busy doing one thing. They're trying to figure things out, and they're trying to do so in a new system, in a new economic climate that they're perhaps not used to or they weren't privy to in their previous country. So like, what is your experience with that? And like, how are you able to help people that don't have that understanding of like, is there, these are things I don't even know. We're credit and we're here to help you get money, right? And if I can shed some light on certain things in between, then that's also nice. But like, what is that experience in terms of getting people into a house that perhaps don't have their citizenship or whatever, but they're paying taxes, they're paying this?
Yeah. It's I'm glad you asked. A big part of my current audience on social media and also my clientele are Hispanics or Spanish speaking customers. And when you come from another country, most of them, immigrants here in the United States, when you come from another country, you have a completely different concept of what it is to buy a house, because in every country is different.
Different.
So you really have to start from scratch. You kind of tell them, forget about everything for a second. Forget about what you've heard on social media. Forget about what you've seen. Forget about what you saw on the news and what you did in your home country. And go from beginning to end, explaining and educating the customer on how the process works, all the options that they have. So they understand that, number one, it's possible to do it, because a lot of them think that it's impossible, or a lot of them might think that it's very difficult, and you just need to be educated on how to do it. It might not be that difficult. You just need to be prepared. You want to make sure that that you educate them, that you start from scratch, you explain how things work here and the different options that they have on the table. And then most importantly, we don't let anyone go, right? If this is not the right time for you to buy a house, we're gonna jump on a working plan right away. We're gonna
great.
figure out.
Yep.
We're gonna figure out a way to make it happen in the next few months or in the next year, right? So and then you guys have been a key part of that process, because now the credit repair has become a part of our working plan, right? Yeah. I was talking about the four legs of the table. If the problem is debt or the problem is it's credit score, right? Then we start working on that right away.
Right.
In most part of the time with you guys.
Yeah.
So again, we want to make sure that we explain people what needs to be done in order to accomplish it, and that we stay, with them, holding their hand and making sure that we're working with them, even when they're not in the transaction.
And they see you came from their same footsteps.
Absolutely.
So like the not the problem, but the thing is that you have an advantage because you're from the same culture, but you've put yourself behind the books and you've gone through the American process already, and you're able to be in a position where you're like, hey, these are and you're able to level with them on a playing field that we can't, because we're not from Venezuela as an example. So that's, I think, a pretty cool dynamic. And that's honestly, within any industry, all you need is a niche.
Yeah.
All you need is because again, like he said, you can find any loan officer on Google, this down here, but I'm sure they would rather deal with someone from their home country that understands the dynamics of the new country versus John Smith, who they've never met before, that they don't have an inkling of who he is just because he's running a
client,
Google.
The client's just a number.
Yeah.
Oh, this is the 100th loan that we're gonna get this month.
Yep.
Oh, my name is Dimitri. No, you're a number 100.
And I was and I'm I do the loans now, but I was in their shoes at one point. So using my personal experience to explain to them, what I went through and what I do differently now as a loan officer compared to, because when I bought my first property, I work with a different loan officer. I can originate my own loans, but at that time I worked with a different lender and a different loan officer, and I learned a lot about the things that I shouldn't do as a loan officer, and I learned a lot about that experience and the customer service side of it and what I would do differently, to provide a better experience.
Yeah. Right.
So I use my personal experience and I explain people what I went through and what I'm going to make sure that doesn't happen to them.
One of the things that I've seen over the years, and this dates back to 2020 when interest rates were 2.5%, like you were saying. One of the things that I've seen that it's kind of it always leaves me with a question in my head. People that have 620 credit score, their credit cards are maxed out, but they're trying to buy a house. Mm-hmm. My advice to that is definitely do not try to buy a house and acquire more debt when your debt is already maxed out. I just think it's a total turnoff, and I think it's a bad position to put yourself in. I would like to hear from a loan officer. What do you have to say to those people that their credit cards are, because I had this case yesterday. Their credit cards are maxed out, their credit score's on the floor, and they're scrambling to try to buy a house with minimum down payment. What advice would you have for that person?
Yeah, that's I'm glad you brought that up. We are more than a loan officer. I see myself as an advisor, right? It would be wrong for me to just tell somebody to proceed with the purchase of a home, just for the purpose of, making money, ourselves as a business, if I'm not really advising the customer on what's really right or good for them. Yep. So I try to put myself in the shoes of the borrower, right? And I look at it, if I see on a credit report, right, all of these items, negative items, or I see that the customer might be struggling, then that is something that I'm going to let them know. Hey, I'm seeing this, in your credit report. Are you sure that this is something that you can handle? How would you feel, after you make the purchase? Or I also tell a lot of people sometimes, one thing is the payment that you qualify for, and another thing is the payment that you're comfortable with, right? You don't have to max out that payment that you qualify for, right? So you want to make sure that you explain people that you go over that and that you review that information with them. Or like you're saying, if they have other debt and they still qualify for the house, hey, look, this could become a problem later on. Yeah. So again, we want to make sure that not only we're closing the loan, but that the customer is making the best decision for yourself. And because that's something that can, come back and bite you real easily.
How do you gauge?
Afterwards.
How do you gauge a client that is, because obviously time is money.
Yeah.
All of us here can agree that if our time is being wasted, we're not making as much money as we should. So how do you gauge which clients that either you don't want to work with or that you don't think are a good fit, and why do you make that decision?
Yeah. So, as I mentioned earlier, we try not to give up on anybody, but we're very honest with our advice, right? We are not going to, we're not going to tell somebody that it's going to be possible in a couple of weeks or in a month if we know that that's not realistic, right? Some people have to wait, a year. Some people have to wait over, 2 years because maybe they need to file tax returns, et cetera. So we're going to be honest in that first conversation. When we take that initial application and we do that initial review, it's key to determine in what bucket that customer goes, right? So we have different buckets where we place our customers, whether it's, the type of loan or program that they're going to be utilizing or the plan that we're going to be working on, to make that purchase, or, whether it's really, a customer that is a borrower that is not really a fit for, to buy a property. But the reality is that everybody, if they do what they need to do, everybody can purchase a home. And everybody can work towards having all those items needed to purchase a home. For some people, it might take longer. For other people, it might take less time. But it's about really knowing in what bucket we're going to put and what is going to be the plan for each borrower, because each situation is unique.
How happy does it make you, like, when someone inquires about buying a house with you and you check and, like, they have all their ducks in a row? How good is that feeling? Because, like, we know that feeling because, we're doing a lot of different products. SBA, we're doing line of credits, we're doing term loans now, we're doing credit stacking. So, like, when I get that one goose egg file, it's like such a sense of relief. Like, how does it make you feel when you get that file?
Yeah, it's amazing. And it's amazing to be able to deliver the good news to the borrower. That's one of the best feelings. One of the best feelings, the first best feeling is when you pre-approve somebody and you tell them, hey, you're good to go, to go look, place offers and go look for a property. And the second best feeling is, of course, when you close on the house, right? But when you get that, that borrower that meets everything that they need, right? And they're really ready to go and they have done, their homework, and maybe they're also educated and know kind of what direction they want to take, and they make our job easier. It's a big relief, as you're saying. And it's very exciting for us to know that we're going to be able to help another person accomplish that goal of theirs.
And I think one piece that I want to touch back on is not maxing out that monthly payment that you have capabilities. Because what a lot of folks don't realize, and I learned this through obviously experience, is I never maxed out my payment. But that first year of payments is not the real payment. When the taxes come in on the new value of the property, all of a sudden, like, the price is adjusted, and then you're like, it depends on where you live. Like in Jersey, bro, the taxes are crazy. So it's like, I was like, oh yeah, my payments went from, like, in New York, I was renting a 2-bedroom apartment. It was like $5,000. I bought this property. I was paying $3,400 for a brand new house. I had the view of the entire city. It was beautiful. This house, brand new, like brand new build, porcelanosa finishes. This thing was phenomenal. That payment went from $3,500 to $4,800 in 1 year. Because the taxes hit because of the brand new property. It hadn't been assessed. It was still the old assessment. And when it was assessed, I was like, oh my Jesus, it's fine because it's still less than I was paying to rent, to pay to someone. But if you're not ready for that, that's why you always want to have some spread there, right? Like, you don't want to be at if I was at some the 5K, that would have pushed me over almost $7K, and then I would have been like, that made the right decision.
So So a few things that I want to mention about that, because you hit it right on the nail. Number one, when we do the income calculation for a borrower, it's based on their gross income. So not their net income, right? So even though we're calculating it, we're calculating the gross income, that's not really the amount of money that they're taking home every month or every 2 weeks, right? So you want to make sure that also, that you're comfortable with that payment and that what you're taking home is enough to cover all of your expenses and of course that mortgage too. And then a couple tips on what you mentioned about the payments going up. One of the things that I like to do with borrowers when they're buying a property is explain that after the property is reassessed by the county, the property taxes will increase. Most tax collector websites for the counties have a tax estimator where you can put the new value, the purchase value of the home, and it will tell you what the taxes are going to be. So the bank is always going to use the current taxes to qualify you for the house, but you can actually tell the borrower what the taxes are going to be when the property is reassessed. So that's one thing that's important for them to know. And then also important to know is that when you're closing on a house, you usually pay 1 year of homeowner's insurance in advance, right? It's a prepaid as part of your closing costs. But the homeowner's insurance is something that you can negotiate. Number one, you can shop around. You can look for quotes. You can look for insurances. And then number two, you can renegotiate or you can look for new quotes every year. It's not that you don't need to be with the same policy for the lifetime of the loan. You can actually go to different agencies. You can quote your insurance, because every time your insurance gets renewed, if you don't realize, or if you're not paying attention, they might hike up your premium.
Yeah.
And that's going to increase your payment too, because then they let the lender know, and then now the lender needs to collect more money.
Yeah.
So I always tell people, if keep an eye on your insurance. If you see that the amounts are going up, every year or when it renews, shop around, take a look,
And you can even shop after it renews. 'Cause
Absolutely.
There's
Yeah.
federal guidelines. So let's say, your property insurance goes up, I don't know, $400 a year. Okay, let's use 1,000. So it's something about $85 a month. Yeah. You that first 30 days, you can do it up to the 6 months. You can shop around. If you find something that's $400 cheaper, they'll actually reimburse all the money back to the escrow of the mortgage lender, and then they'll pay out the new insurance. I had no idea of that because it happened on my parents' property. Yeah. And I was like on the phone calling, blah, blah. It was like legitimately like a $2,000 increase.
Yes.
Yeah.
And I'm like, and they sent the notification 15 days before. Like that's how they get you. It wasn't like, hey, by the way, it's like
once
30
someone's
days.
approved, how long? If like let's say you got someone pre-approved for a property of $600,000, how long do they have to pull the trigger?
So usually a pre-approval is valid for about 90 days. So between 3 to 4 months, right? That's the length of time that usually a credit report is good for, at least from the lender's perspective. So when you need to make sure, you need to try to be able to close the loan within that time frame. Right. So usually, if I pre-approve somebody today, then they can start, looking for houses. Then we have usually we close a property within 30 days.
Does it have to be within the state, or can they look for any property in the country?
So honestly, they can look for properties anywhere in the country. It also depends on the program that they're using and the type of loan that they're going to use for this property and the purpose of the purchase. But it can be anywhere. Okay. Usually, a credit report is valid for all lenders and also nationwide as well.
Cool. I'm interested in hearing, and sorry for a lot of questions, but this is a question I want answered for myself as trying to buy my first home. What advice do you have for first-time home buyers that are like now starting to think, okay, maybe I should start getting ready to buy a home. I already have my kids, my wife, but interest rates are so high. The prices of houses are so high. And then the other thing in the background is like, we have this new administration. Yeah. They're making a lot of promises. I think DeSantis came out the other day and said that they're going to try to abolish property tax in Florida. So that's a big thing. Yeah. You're talking tens of thousands of dollars a year that, new home buyers wouldn't have to pay. So like, me, for example, what advice do you have for me that, I'm ready to buy right now, but I'm on the ledge of like, okay, should I buy? Should I get into that $5,000 mortgage, or should I wait for this administration to bring down inflation a little bit? Like what advice do you have?
Yeah, good. Look, this is, a lot of people say it, and this is something that I actually, agree with, is that, the best time to buy a house is when you are ready to buy a house. I was actually talking to Dimitri earlier that even though, the market is the way it is right now, the rates are the way they are right now. What needs to make sense for you is the house that you're purchasing and your monthly payment. Yep. So your rate might be high at the time, but if the monthly payment makes sense for you and that is the property that you want, and you are meeting, all those items that you need to meet in order to purchase the house, and it's the right decision for your family, I would say go for it. Go for it, because this is the right time for you. So when I speak a lot, with especially with first-time home buyers they're concerned about rates, they're concerned about whether the market is going to crash or not, and things like that. I try to tell them, try to block all that noise and maybe what you hear constantly every day, and just let's run the scenario based on your particular situation. And then based on your particular situation, you can really make the decision whether, it's something that you can do, whether it's the right decision for you at this time or not. Okay. Because that's really what you can control, right? Everything else, it's very difficult to control. We can kind of anticipate certain things, but I wish I could tell you, at the end of the year, rates are going to be, below 4, just to give you an example. But, nobody really knows what's going to happen. Nobody knows what's going to happen with the economy, inflation. I think there are a lot of good things happening right now, and a lot of good things that are going to actually benefit the real estate market in this country. Yeah. But it takes time. It takes time. So, I handle every situation,
it's
differently,
it's
uniquely,
unique.
right?
Unique, yeah.
And if it makes sense for you and your family, go for it. Right now, it's arguably one of the best times to buy because there's less competition out there. a lot of the competition that we usually see in Florida is, first-time home buyers against investors, because investors go and they want to buy those single-family homes so they can then rent them out.
Yeah.
But rates are a little high for investors to cash flow at levels that they're used to cash flow, at least in the past. So right now, first-time home buyers don't have that much competition, maybe with other first-time home buyers, maybe with some investors, but not like it was, for example, during COVID. Not at all.
And like to that point too, Alex and I have a very particular stance on realtors, which I'll get into in a second. But when it comes to mortgage brokers and loan officers, and I speak for him on this topic, we know that you guys do what you need to do to earn your commission. And let me know and add anything if I'm missing anything. But for realtors, for him and I, it's just like, bro, what are you doing? You're opening up a door and you're showing someone around. That's literally what I think, because when it comes to the credit, they don't have a semblance of understanding on the credit. They lean on the mortgage broker or the loan officer or a credit repair specialist or whatever the case may be. So it's like going to the point that you made, and the reason why I interrupted you when you said the word competitiveness, I already saw in our neighborhood now, I saw an open house. Yeah, work it.
Yeah.
You're back on it, because a few years ago when things were inflated high, for me and what I saw, a lot of realtors like this.
Yes.
A little bit, and that they were in the same boat as people that sell cars, because the cars went through the roof, cribs went through the roof, and everybody was like this because of the economy. Now things are normalizing again, and now you have to what? You got to bust your ass to sell the house again, and that's the way it should be, because it shouldn't be served on a silver platter, and you're getting 3% or 6% commissions on something you didn't really work too hard to get, and that's why it's like now I'm seeing the competitiveness increased across the board, because there is a lot more inventory. Maybe the rates aren't where we want them to be, but there's more inventory, which is causing people to kind of like, they have to move it.
But I think also like, and this is I would say the demise of expectations of people with COVID. So before COVID, interest rates were hovering around 4.5%, right? Right now, interest rates as of yesterday is 6.5, 30-year mortgage rate, right? My parents bought their first property in 1984. They paid 19% interest. In Europe, in every European country, it's 14% and above.
Yep.
In the last 15 years, the average mortgage rate has hovered above 6.5%, with the exception of COVID.
Yeah.
So like right now, the rates today are exactly what they were 4 years or 5 years ago. But people
Average.
are enamored with the fact that sometimes you hit. We were talking about this before we came on. If you bought Bitcoin in 2010 at 10,000, right now,
2010 it was like $1.
Yeah.
If
If you bought it then, you hit. But I'm like, that's the way the market works, right? But like you have an anomaly that is a once in a lifetime kind of event. And it happened in the 80s where George Bush Sr. introduced new mortgage regulations, and it dropped the mortgage rates from the 16s down to like high 9s. And then it just got to a point where it stabilized at 6. And I'm literally looking at a graph. This is since 1980. And then the graph literally just shows it's like a slow decline. Yes, there's an uptick now, but it's because demand was high.
Yeah.
But
And
you
all
also have
the
to-
factors in the previous administration caused inflation to increase, which inflation has the most impact on across everything. But folks are enamored with like, man, I wish I want to get a 3% mortgage. I'm like, it's probably
It's
never
not
going to
gonna
happen.
happen. It's not gonna happen.
Ever.
But so to argue against that, right? Yes, the interest rates used to be 6, 7, like you said. In other European countries, they're 14. But what you didn't see back then that you see now is the crazy average median home price.
Yeah.
You know, like
Absolutely.
my mother bought a single family home in the 90s for us. It was 2 floors, brand new, beautiful neighborhood, Bird Road, everything great. It was $300,000, so for a first-time home buyer back then, what did you have to come up with? 4 or 5 grand. Yeah, you had the 6-7% interest rate, but your house was $300,000. Now you have a 6-7% interest rate, but your house is $800,000 and needs to $200,000 in remodel. So that's the difference I think that you're seeing now and you're seeing then. The other thing that you have to factor in is how much people get taxed in this country versus other countries. So like you're getting income tax, you're getting federal income tax, you're getting state tax, then you're getting taxed on the house. So
the food you buy, everything.
by the time you produce $100, by the time it's in your bank account, it's like 40, So that's what I think the issue is. But I do think that there's a lot of light at the end of the tunnel in the near future for your industry and also for first-time home buyers or any home buyer, because the inflation is going to come down. That's a fact. They found trillions of dollars in miscellaneous spending in the government that they've already cut. They're talking about giving everybody $8,000 tax refunds. They're also talking about cutting, property tax. So I think that all these minute things, they're not going to have immediate gratification for lenders like us. But I think that over a year, bringing the inflation down, bringing the interest rates down, bringing the taxes down, I think our industry is going to boom like it's never boomed before. And we're in a recession-proof business, all four of us. We're in an industry where people need money when they're doing good, and people need money when they're doing
Even
bad.
more so when they're doing
bad. And I'll give you a great example. Our e-commerce businesses. 3 years ago, we were doing around $4 or $5 million a year. We needed money because we needed a bigger warehouse, because we needed more inventory, because we needed more employees. Now we're doing a little less because, sales are down with inflation, whatever the case may be. The average ticket is down. But guess what? We still need money now.
Yeah.
Because we still need more inventory.
Shift more money around, yeah.
Yeah. So at the end of the day, we're in a great business. I just think that the criteria is what changes. The qualifications.
It's honestly it's very exciting times right now because there are a lot of moving pieces, and obviously with the new administration, they came in to shake things up, right? They came in to make significant changes right from the start. And that's very interesting because we know how high home prices and high rates are not a good combination. So we know that it's hard to bring home prices down because that's really the market.
Demand.
It's really a demand and supply issue. But the federal government and local governments and agencies can have more of an impact on rates. Even though, of course, they don't have the say, let's lower mortgage rates right away. It's not going to happen like that. But their actions will have a direct impact on mortgage rates.
Yep.
And then as demand increases for properties, then, of course, it brings down that interest rate, that yield. So because there's more people in the business of purchasing a home. So I'm personally seeing a lot of enthusiasm from people that maybe were holding off in 2023, 2024. Now
they're starting to have the conversations.
Yes,
Hey,
and
I'm kind of ready. Yeah,
exactly. Now they understand that we are where we are. We can't change where we are right now,
Yeah.
right? We can change ourselves. We can change. I can try to make more money. I can try to improve. I can improve my credit. I can lower my debt. Those are things that I have control over, and I need to adjust myself to the current market. And if I want to buy a house, then I need to do what I need to do to buy it in this current market.
Yeah.
So I'm seeing a lot of enthusiasm. That idea of COVID, that rates were super low, that's kind of fading away little by little. People are understanding that we are in the 5s and the 6 rates right now.
And the market has stayed.
Yes.
Right. So like everybody thought the bubble was going to burst and these prices were going to drop dramatically.
No.
It's been like 5 years now. Like
Yes.
the market has stabilized, at least in South Florida.
Yeah.
The number one conversation was like, when are these home prices going to drop?
Yeah.
But I'm like, the problem is still like you put a house on today. Yeah, it's not selling in 24 hours, but it's still selling within 30 days.
Yeah.
Right.
So like, and that's what like the value of the home kind of stays in a certain level. Now, don't go out there and buy the most expensive property in the mile radius by like $200,000 because someone put hurricane impact windows.
Yeah,
I'm like,
right. Yeah.
I'm like, you're not going to see the benefits of that purchase in 30 years. It's going to take you some time in that scenario. But that is, I've learned a lot. So let's start with that.
Yeah.
I'm
all
very.
of us have, bro. It's
It's
dope. That's why these podcasts are so cool because like I'm sitting here learning live about new things within the sector of what we already do.
Yeah.
And then the last podcast, we have a guy who does consulting for something else. And then it's like these type of crucial conversations for me allow me to understand that like I don't know what it's going to be, but there's going to be a wave, I think now within these next 12 months where we can capitalize and make a lot of money and not have to dwell on 2-3 years in the future and say, damn, I wish I would have done X, Y, and Z
I agree.
when everybody was making money during that time frame. So, we're just using all of our heads and staying in the loop with each other. Bro, like we discussed it the other day on our other podcast. We were playing video games. We were playing FIFA at my boy's crib, and one of our boys goes, hey, stop what you're doing right now. There's a meme coin that Trump just dropped. Buy in we bought it at a very, very low price, and for the most part, everybody made a lot of money. We had a friend of ours who made 7 figures in 48 hours, literally because of that.
Yeah.
So it's just being open-minded to the what is at that moment in time, and sometimes just the open-mindedness translates to life-changing type of desired consequences. So it's like that's kind of where we're at right now, understanding the numbers, profitability, margins, where's our exposure, what can we need to do, where do we need to shift money right now. And as you saw, like we were going over our operations before we got on camera, and it's just like there's so many moving parts on a daily basis. It's also just as crucial to be open-minded when people and circumstances arrive at our doorstep and say, hey guys, I'm holding a sign that says opportunity.
Yeah.
You know, take it or don't take it, but it's here.
I love
you know?
But look, again, thank you for coming. We're going to the last segment, which is a rapid fire hustle round. So I normally we do this for every person who comes to the podcast. So I'm gonna fire some questions. You let me know quick answers. Yeah.
Okay.
So if you're game, you're good.
Yeah. I'm in.
All right, let's do it.
Let's try it.
So what's your go-to productivity hack?
Honestly, I like to exercise.
That's good.
Exercise, to clear my mind and get back to work right away.
Nice. I'm on that tip too. I was up this morning working out at 6:30.
Yeah.
What's the biggest misconception about home loans?
Biggest misconception about home loans is a little bit about what we talked before, that all four legs of that table need to be perfect. Credit doesn't need to be perfect. Down payment doesn't need to be perfect or huge. Debt doesn't need to be at zero, and income doesn't have to be hundreds of thousands of dollars.
Got it. What's one thing every home buyer should do before applying for a mortgage?
It's a good one.
It's a good one. I would say to just look at their personal situation, right? And think about, is this a time that I want to buy a house for me and for my family? And then consult with a mortgage broker to see where you stand for that purchase.
Got it. That's awesome. That's a really good one. If you could give one piece of advice to a first home buyer, what would it be?
Get pre-approved before you go look for houses.
Yeah.
I know that
I love this house. It's
No,
200,000.
honestly,
You're approved for 200.
and you're right.
I know that I'm the loan officer, and I'm the one that pretty much has to do that. But I don't say it because of that. I say it because if you don't get pre-approved and you don't know what your financial situation or your purchasing power is, then what are you doing looking at houses for?
No, and now that's honestly just the way things are. And I'll give you a personal story. I went to Charlotte a couple of years ago just to look at cribs, and I hit up a realtor and I was like, hey, can you show me this, and this, whatever? And she asked me if I had a pre-approval or something, whatever. And I didn't know that that's kind of what's required now to for people to take people serious, right? Because anybody can say that they want a house of X, Y, and Z, but it's like, I didn't understand at that point, and again, there might be information I'm privy to this week that I wasn't privy to last week. But at that time I was thinking, bro, who the fuck are you? Do you know who the fuck I am in this industry? But now I understand why they did that, because they don't want to waste their time playing fucking tour guide. And then, the client has a 540 credit score, it's $10,000 in personal debt.
Exactly.
Collections and no tax returns.
That's what I want to avoid. Yep.
So I get it now. Yeah, I get it.
And then the last one is, what's the best investment you've ever made in yourself? Not because it doesn't have to be anything outward facing.
Honestly, this is going to sound a little crazy, and it's maybe not really an investment, but finding my wife, it might be a different answer that maybe other people have provided, but when you have, that partner at home, that supports you when you're taking risk, when you're going after new opportunities, when you're going after different things, when they have to sacrifice certain things as well so we can be successful in our business, it's huge. So maybe even without knowing, when I married my wife, that was one of the best investments. Taking care of her, taking care of my family was one of the best investments that I could have made in myself.
You're actually the third person that said that. And Alex, myself, and Dee say the same thing. So shout out to our wives.
Yeah, absolutely.
We're super grateful. And I'm we put in a lot of hours. So
they know.
They know.
Yes, I agree.
And they know we reciprocate that.
They know sometimes even when we don't have to say it, they know when we come home with a certain type of energy field around us, yo, just give me a couple of minutes because it's been a little bit rough today. And then the exposure, the risks, everybody wants to talk about the wins and the victories, but how many times do we lose?
Absolutely.
Either our time or investments or opportunities or, things that we thought were going to pan out and maybe didn't pan out as much. And they have to be there as a pillar to just for us to lean on and for us to have that backbone, because
it is a backbone,
if not, for me, my partner, my girl, she puts me in a position where I'm not scared that I'm going to be alone if things go good or things go bad.
Absolutely.
So that type of support, my partners, my family, my friends, it's all intertwined, and that type of support system, it kind of sometimes makes me feel invincible because
absolutely.
even though I know I might take some losses along the way, for the most part, I'm probably going to be good because I have a good support system. So
ride or die.
yeah,
That's how I see
yeah.
it.
Ride or die.
Yeah.
Well, look, Stefano, this was number one, really valuable. A lot of good insights, very good nuggets. And anybody watching this that wants to follow Stefano's content, we're gonna put it in your Instagram handle and stuff on the bottom. Also, probably a link to contact you if anybody's interested in mortgage lending here in South Florida or anywhere from an investment property perspective. So we appreciate you coming on. And again, for those, if this is the first time you're watching, please hit the subscribe and share this with anybody you think will find value in this. And again,
thank you for the opportunity, guys. No, it was a very fun conversation. Thank you.
cheers. We're out. See you on the next one, guys.
Peace.